Electric vehicle stocks have been slammed, with car makers like Tesla and Lucid down 18 to 56% since last November. Charging station stocks haven't been spared, with ChargePoint, Blink, and EVGO all down, but it's the lithium miners down 20 and 30% over the past 4 months that could be your biggest opportunity of all. In this video, I'll show you why the lithium companies are the best investment in EV stocks right now, the supply and demand forecasts that make this a no-brainer investment over the next decade. Then I'll reveal the 5 lithium stocks to watch right now. We're getting started, but before we do, I've got to send a special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, all those electric vehicle stocks have plunged since last year, and I know there are a lot of Tesla diehards that just say own the car maker, but lithium is where it all starts. This critical input into that electric and rechargeable batteries has a supply-demand imbalance, pushing those prices to record highs. And these companies can't help but generate billions in cash flow. Now I want to get to our list of 5 stocks, but stick around because later I'm going to walk you through that supply and demand picture and why every EV investor needs to be watching these stocks. Our first lithium stock is by far the smallest at just $105 million market cap and trading for 65 cents a share. Lithium Chile, ticker LTMCF on the OTC market. Now there are a few caveats here. This is a pre-resource miner, which means it owns the rights and the properties, but is still testing on where to start mining. Now that's going to mean it's a riskier play than some of these others because it all comes down to where it finds those reserves, how much it finds, and then securing the funding to search. But there is definitely the potential here. The company has 13 properties in Chile, Argentina, and Bolivia, plus 4 properties in gold exploration. The most promising so far is the Arrizado property in Argentina, over 23,000 hectares, with initial brine chemistry testing showing consistent results averaging 850 milligrams per liter of lithium. Now the company has the basic environmental study and the geochemical testing completed, along with 3 wells drilled sampled. Internal estimates for the project put it between 4 and 10 million metric tons of lithium carbonate. Now valuing that against a recent bid by Amperex for millennial lithium assets for $50 per metric ton, that would value Chile Lithium's 60% Arrizado stake between $120 and $300 million, or about $1.72 per share for this one property. The company also has 3 other key properties in testing, all with the potential to add to that asset valuation. Shares are trading for around $458 per hectare of property versus an average of other pre-resource miners at $826 per hectare. So that drill program at Arrizado could be the turning point in the stock price. The company has nearly 14 million Canadian dollars on balance sheet cash now, always important when you're looking at these pre-resource miners, and insider ownership is 43% of the stock. So I'll leave a link to the company's website and investor presentation in the description below. Make sure you check that out. Our next EV lithium stock isn't a stock at all, but the first lithium ETF, the Global X Lithium and Battery Tech ETF, ticker LIT. The fund holds shares of 41 companies through that full lithium cycle from mining to refining and battery production. It's been trading since 2010 with a 10.7% annualized return since inception and 30% a year over the last 5 years. And there's 2 ways I really like to use these kinds of ETFs whenever we're talking about a specific theme. First is just a way to get that broad exposure to the entire theme. And within that fund, those 41 companies, you're not only getting an investment across the product cycle from the miners to the battery makers, but also access to a lot of stocks that might not trade on your home country's market. It's a diversified play on the entire theme. But the other way you can play this is to use these kinds of ETFs to start your own research. You can go to the website for any of these funds, look for holdings in the menu, and see exactly what the fund is holding. It's an easy way to find all the best stocks in a theme, then start your own research to narrow it down to the very best of the group. And we'll get back to that list of lithium stocks to watch, but looking at the supply and demand picture, it's just going to give you a sense of how strong this investment case is. With countries committing to phase out gasoline and diesel engine by 2040, and some automakers making targets for 2030, demand for lithium is expected to grow by 30% annually for years to come. Global electric vehicle sales more than doubled last year to 6.7 million cars, and the market share for EV cars is now 3.4% of cars and light trucks in the US alone. EV share of the US market is expected to reach almost 30% by 2030 for more than $4.7 billion in annual sales. Because of this, S&P Global estimates that lithium demand could reach over 2 million tons a year by 2030, an increase of 2,200% over the 641,000 metric ton forecast for 2022. And you see that 20 times increase in demand is going to be driven by not only the number of electric vehicles produced, but the larger battery sizes as well, as trucks and even construction equipment starts to transition into electric. The problem, though, is there just isn't enough lithium supply to keep up. S&P is forecasting the lithium chemical supply at 636,000 metric tons this year, a deficit already of 5,000 tons to the demand, and that deficit is growing every year. And then that gap, the growth and the difference between supply and demand, is about to get larger as supply crashes into the reality of the world's lithium reserves. You see, Australia and China still dominate global lithium production, with the two countries alone producing 62% of the annual supply. This chart by Visual Capitalist shows the mine production by country based on 2020 lithium production of 86,000 tons. Chile is another big producer with about 24% of supply, and the mines in the US crank out just 1% of global annual supply. But then if you look at where the remaining lithium supply is, the global reserves, we see here the 2021 BP statistical review, we see that nearly half, 48.5% of the world's 9.2 million estimated tons of lithium is in Chile. Australia and China hold just under a third of the world's remaining supply. In fact, Australia has just half the lithium reserves that Chile has. So this supply-demand imbalance is leading to surging prices and is likely to only get worse. The price of lithium carbonate rose 413% last year, while lithium hydroxide rose 254%. Getting anywhere close to the kind of supply increase we're going to need to meet demand is going to mean either massive development of those Chilean reserves, or what I think is more likely, that the bigger miners just start buying out any company with assets in Chile. Now that's why I think we're about to see a major wave of acquisitions in lithium miners, especially those established miners buying up fields to be able to meet those production targets. In any case though, on that supply-demand picture alone, we're likely to see lithium prices continue to move higher, and that's going to make any of these miners cash flow machines over the next decade. The next stock on the list is a leader in the theme, $22 billion Albemarle Corporation, ticker ALB. And looking back at the stocks in the lithium ETF, this is the top holding at nearly 10% of the fund. The company is the global leader with operations in 75 countries across lithium and other chemical catalysts. So then this isn't going to be a pure play lithium stock, but it's still a leader and it has that exposure to both hard rock deposits in Australia and the lower cost brine in Chile. The scale of Albemarle is ginormous and management is leveraging that into growth. The company is targeting revenue of $6.7 billion through 2026 for 15% annualized growth. Now, what's really surprising here, though, is not just that strong sales forecast, but management is also guiding to higher profitability. Management is targeting the earnings margin from 25% last year to as high as 39% over the next 5 years. Now, while the dividend here is only 0.85%, management is committed to returning that shareholder cash. And the company has made 27 years of consecutive dividend increases, and while dividend growth has slowed over the last couple of years, I expect it's going to re-accelerate if they can reach those earnings targets, because this company is just going to have plenty of cash flow. And that management target for earnings growth is really what surprised me and could take the shares up as much as 3 times higher. The stock is currently trading for 6.7 times on that price to sales basis and a price of 28 times 2021 EBITDA earnings. Now, if you just apply those same price multiples to management's 2026 targets, you get a valuation between $383 to $621 per share. Now, that's an annualized return of 15 to 26% over the next 5 years. Not much smaller than Albemarle is our next company at an $18.8 billion market cap, Sociedad Química y Minera de Chile, ticker SQM. Now, SQM is a global chemical company with just 30% of its gross profits from lithium, so again, not necessarily a pure play on this theme here, but there's still a lot to like about the company. It claims a 19% market share of the lithium production with 96,000 metric tons of capacity and is targeting as high as 180,000 tons next year. It also controls 48% of the global market for specialty plant nutrients, another very strong growth theme. So what it lacks as a pure play here in lithium makes up for it in diversification. The company has a similar production profile to Albemarle with exposure to both Australia and Chile, and the most recent quarter's numbers were impressive. SQM booked a year-over-year growth of 94% in lithium revenue and 46% growth across the company. Now, gross profit nearly doubled, and is continuing higher prices for lithium should keep those sales growing. We've still got one more lithium stock to watch, but do understand it's not all rainbows and unicorns with these stocks. There are a couple of risks that you need to be aware of and be ready for. First is just the correlation between lithium stocks and shares of Tesla right now. Anything in electric vehicle stocks, it's basically been the Tesla show going on the last few years, and probably at least a few more years. Even some of those other electric vehicle manufacturers, their stock prices tend to follow shares of Tesla higher or lower on any news out of Tesla or its CEO. Now that's not always a bad thing. You can see here in a price chart of a few of these lithium stocks, as shares of Tesla in red rose last year, the stock price for those lithium producers rose as well. But it works the other way also. As shares of Tesla sold off on weakness in the broader market and those worries around chip-related production problems, these lithium stocks got hammered. Those lithium prices, they continued to reach record highs, and demand forecasts were still strong. It just didn't matter. And Tesla sold off and took these other stocks with it. So just understand, even as the fundamentals for these lithium stocks point higher, the stock price is sometimes going to make no sense at all because it's just following that investor sentiment in Tesla or just the broader EV market. Now, the more existential risk, though, is that we find some other element to produce EV batteries. Now, lithium is still by far the preferred use, and that's why demand forecasts are so high now. But there is nothing to say that something else might come along and replace it or substitute it in the next decade. But even if that happens, it's going to be a long and slow adjustment process, and we're still going to see strong lithium demand. But the simple fact of a substitute would be a hit to these stocks. Lithium Americas, ticker LAC, is another smaller development company at just $3.7 billion. The company is partnering with Ganfeng on its Argentina project and has received permits to start construction on its Nevada project at Thacker Pass. Management has said it expects both to begin production later this year or early in 2023. The company believes the Argentina field could hold as much as 366,000 metric tons of lithium, with the Nevada project just under 180,000 tons. Even on a 49% interest in the Argentina project, that amounts to a valuation of $9 billion for Lithium Americas on that field alone. Click on the video to the right for the 5 best investments of 2022. 5 investments I'm making right now, and the 5 to avoid. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.